Property Finance Uncut, the must-listen podcast for anyone with a mortgage. Find out the truth about what Australia's lenders are up to and how to make sure you're in the best possible position when it comes to your property finance.
G'day everyone, how you going? Phil Tarrant, host of the Smart Property Investment Show. Hope you're well. Here we are for Property Finance Uncut. And I've been thinking about this over the break. This is our first time back. Obviously, the Reserve Bank of Australia met today for the first meeting for 2024. 8 meetings this year rather than the 11 that they used to do, noting that January was always a holiday, so they never met then. But first meeting back, no change as expected. And I've been thinking over the holidays, if you can call it that, whether or not I need to do this podcast anymore, because I reckon rates aren't going up any further. And I say that based on some of the inflation numbers that came out the last week or so. And the mail is, and some economic economists are now predicting interest rates to start coming down from the September quarter. Who knows? Do we need to do this? Let us know. Send us a comment. We're happy to continue to report on what's going on in interest rates. Joining me in the studio, Paul Glossop, CEO of Finni Mortgages. Is that it? We're done?
Mate, I think we sort of both made that comment late last year. I think we were done. It was dubious whether that last cut was that last rise was going to happen
in November.
And it did. But I think a lot of the data that's dropped, i.e. 0.6 increase CPI for the last quarter of last year, probably tells us we're smack bang in the middle of what their target range is on an annualised basis, and that's falling dramatically. So yes, in short, I think we're done. The conversation's now dramatically and very quickly shifting to when is the cut going to start.
What are you seeing? I mumbled through trying to say economist beforehand.
You did, yeah. Your credibility was dropping.
Don't worry, I don't always get it right.
Neither do I.
Yeah.
But one thing I think we're probably going to get right is the fact that there won't be any more rate rises for the foreseeable future. And I think probably mid-ish this year. It could happen a little bit sooner if we see that this happens, as far as, if we see this same trend of what happened quarter four, even half of it come through for quarter one for 2024, there may be a need to stimulate a little bit quicker than expected. Futures, as far as 12-month-ish, where the forecasting looks like, it's sort of circa 3.5 to 3.75. So that tells us
the official cash rate. So that tells us there's maybe 0.5 to 1% to be shaved off circa where we are right now. So I think what this means, and the so what moment, and what does it mean, Basil, moment for me and for anyone out there with a mortgage. You've probably, if you haven't already, you've probably had your cheap rates to revert to retail rates and much more expensive rates from the holiday of where we were during the COVID years. And that goes from, essentially now, is fixed rates really going to feature for any real credibility for anyone who's got a residential mortgage? And I think personally, variable will certainly be a strong consideration for most if they're sort of at that point now of a loan needing to be refinanced, or thinking about where do I get my surety from my income and my cash flows, at least for the next 12 to 24 months, because fixed rates are certainly, in my opinion, not going to provide the best stability or opportunity to probably be paying the least once these rate cuts start, which is always the same when it comes to rate cut cycles. And it's got to be a question for your mortgage broker. They can give you some views, opinions, recommendations around fixed versus variable. Ride the fixed rate up, ride the variable rate up, you ride it back down. Historically, traditionally, you always sort of come ahead unless you time it perfectly with fixed rates. I've been stuck on fixed rates before thinking I was clever, and then it sort of starts coming down and you just get stuck. Stuck there in the middle. But this is about mortgage finance. So your team over at Finni Mortgages, finni.com.au, can certainly help people around it. But I'm going to telegraph something that I've seen. I saw it last week, and it makes me nervous.
Right. It
makes me very, very nervous. And I think all property investors need to know about this. I was speaking to one of my banks for something administratively, trying to get some.
You seem to do that very regularly, by the way.
I hate banks.
For somebody who hates banks, you spend a lot of time on the phone with them.
I hate calling banks. And I thought, you know what? While I'm here, I think I was trying to get a statement from an old accountant. While I'm here, I'll try my luck. I thought I'll try my luck, and I got put through to the retention team.
And I said, hello, Mrs.
Mr. Retention.
Mrs. Retention. I've just refinanced the loan from you, and I've got to work out whether I'm going to say who this lender is yet. I don't know. I might get my powder dry on it because they're all up to it.
Right.
I said, I've just refinanced a loan to another lender. So it was from a Big Five bank to another Big Five bank. And I said, look, I've still got 3 loans with you, and they're not small loans. And I went, oh, look, I'm getting cheaper pricing elsewhere. Can you have a look at my rate? And I went, sure, we can do that, Mr. Tarrant, no worries. Jumped on the computer, type, and went, can't do anything. And I went, what do you mean can't do anything? He went, no, nothing. And I went, just like that? And I went, yeah, just like that. And I went, why is that? And I went, it's our policy now not to reprice investment properties inside of trusts. And I went, oh, really? And I said, just to be clear, you're telling me there's a rule at your bank that you won't even think about looking at someone's interest rate for an investment property inside a trust. She went, that's correct. Thank you. Have a nice day. And I went, I'm going to refinance all my other loans. She went, sure, go for it. Yeah, I'm being colloquial here. And I went, okay. Anyway, and I sat there and I went, ooh, okay.
Why did that happen?
Why did that happen, number one? Number two, we're at the top of the interest rate cycle right now. So I reckon banks are just going, here we go, let's gouge. Number three, and importantly, when interest rates start coming down, they're already setting a precedent to not to follow those rates down because they're grandfathering these loans at these rates at these top of the interest rate cycle, and that concerns me. So I reckon a lot of property investors who invest inside of trusts are going to get stuck in a new term, trust jail.
It's a really interesting one, Phil, and I think we've talked about this
I'm wrong, maybe I'm right.
I don't think you are, mate, because the trust conversation has been one not necessarily that's new, and it's always been one of the risks with investing in trusts, and any broker who you speak to will likely attest to the fact that the policies are different, and it becomes much more subjective depending on who you're working with, and that's the challenge when buying in trusts or when people start to explore opportunities to invest in trusts is, yes, it can open up bigger and more opportunities to borrow, but what it does is it narrows the pool of lenders, and then all of a sudden the control slips away from you, i.e. that conversation. You're like, oh, I want to reprice those. They obviously would likely know that they're probably only one of a handful of lenders who are in that space for that type of product. Therefore, you aren't as readily available to go down the road to bank number 2 of the big 5 to say, take this, would you?
Well, I do note, though, a lot of banks' investment lending has increased quite a lot, whether it's in trust or not.
Personally, I'm correct.
However, and I interface this with the front page of the Fin on I think it was last Friday, pretty much saying because of these stage 3 tax cuts, a lot more people are going to start thinking about investing in or creating wealth through trusts. Now, the government are going to be having greater oversight on trusts with a view towards trying to combat potential tax minimisation. So it's going to get very, very complicated moving forward. But it just telegraphed to me that banks are going to be intransigent on negotiating in trusts in a downwards rate cycle.
Yeah.
Just flagging it.
Yep.
Just flagging it right now. And there's going to be some brinkmanship around it. So if I were a investor, I would be making sure that you are ready to go. You've got to speak to your broker about this. When rates start coming down, I think you're going to see refinancing inside of trusts.
Absolutely. And we at finni.com.au, I know the team do a lot of work with investors who buy many properties within trust and create trust with the intention to continue to proliferate their portfolios. And that's something they've become very attuned to, is who the BDMs are to speak to in preparation to make sure that we're best equipped for when these conversations happen, because there's going to be a big divide between those who can and those who can't in that space. And the costs that are going to be involved for those who sit there in trust prison essentially are going to be far higher for those who aren't proactive. And a good broker who understands that space is going to be worth their weight in gold, because it's hands down going to be, like you said, mate, it's going to be a very quick moving space.
It is, and it's sad. It's sad that this is the way it is. But banks give preferential pricing to new customers versus long-term loyal customers, right? And you sit there and just go,
Doesn't
why
make
is
sense.
Because most people just go, it's too hard, don't want to do it, don't have time, energy and effort. It's 0.5% more than what I get elsewhere, but could I really be bothered? Yes, be bothered about it. Yes, be bothered. This is what you need to be speaking to your broker about today. Now, there's ramifications to this as well, because if property investors are disincentivised to buy property inside a trust, that means there's going to be less transactions for property investors, which means less rental accommodation available for renters. So hopefully some economic forecasters and some smart people in the governments, state, federal and local, are thinking about this right now, because the banks might be able to gouge and make a few bucks on the way through and retain higher interest rates for as long as possible. The flow-on effect is significant.
You're making an assumption there, Phil, that the banks have only just realised that they can gouge in these situations.
Believe it or not. Believe it or not.
Just sat there. It's just an epiphany out of nowhere.
But again, and this is property finance uncut, right? Like, I'm being quite uncut here. Yeah. You'll start seeing innovation in mortgages again.
Yep.
Bring
That's
back
exactly it.
Aussie John and Mark Burris, Aussie and Wizard, we'll save you. Non-banks are doing it tough right now. If they can actually get the financing and the funding,
you'll
the
white label products,
you'll start seeing acceleration.
The YBRs of the world, etc. They're the ones who are going to. They typically benefit from these situations.
Yeah, but they've got to get the money, right?
They do.
They've got to make their mortgages competitive. But,
correct.
If you're in a trust and you're concerned or worried about this, do yourself a favour. Call your bank, see what they say, and tell me what they say.
I'd be interested.
I'd be really interested to know.
I might do that on the way home today, Phil. I'm going to give one of my banks with a trust inside of it, because I haven't actually looked at repricing that for some time, and I might report back.
Yeah, and tell me if they just go, no,
can't do anything.
We don't do it. They didn't even entertain it. If anything, they were frosty.
I might even say, look, you helped my friend Mr. Tarrant.
Yes. I'm not going to say who this lender is, because I don't mind this. I like all banks, by the way. They're
you're
all banks
very
my
pro-bank.
friends. I'm very pro-bank. Bank's good. Bank's a great partner in creating wealth. Mm-hmm. But, if you're not happy with your interest rate, get ready to refinance. So I think you're going to see a spate of this come the back end of this year when rates start coming down and banks aren't reducing their interest rates by 25 basis points, the speediness that they went up. You're going to have to do something about it.
Absolutely, and this is a time to be proactive. And this is what we've always talked about: is they will be next day rates up, your rate will be up. Yeah. Rates down, you could be waiting 4 to 6 weeks. Yep. Sometimes they won't even shave anything.
Or they're just going to cost of funds.
Absolutely.
When we gave you when we gave you your loan, and if you don't understand how this works, I'm not going to go into it too much, but when we gave you that loan, we had to get that money from someone else at this amount. So therefore, we need to consider you on that for the rest of the time that you're with them. The only way out of it is a refinance. There you go. Property finance uncut.
I like it, mate.
Can your brokers help with this?
Absolutely. That's their job.
Are they angry?
They are very hungry. And I'm pretty sure you're going to have a conversation with them about that trust one as well, because that's going to be probably an opportunity.
I'll refinance everything.
Absolutely, and that's their job is to be the Bulldogs, to really spend that extra time, which for whatever reason you love spending on the phone with your ample amount of spare time.
I normally do it on a Friday. So what I normally do, I treat myself on a Friday to a fried rice from the local Chinese joint. Right?
And to an hour and a half hold into elevator music.
I come back and I'll dial it up and I'll sit there and I'll eat my fried rice, just getting angry, just getting ready for the fight. Getting ready for the fight.
2 piccolos sitting there shaking.
But some banks are excellent. I remember trying to reprice with Macquarie. So good. No worries. Easy. Yep. Some other banks, like Commonwealth Bank, oh God,
not so good.
A couple of years ago, I'd go and listen to hours of rants on the Smart Property Investment Show.
Pretty sure that's what it was. For a couple of years, it was just you ranting about CBA.
Yeah.
And your love and hate.
Yeah.
Anyway.
CBAs, I like CBA.
They're all right.
Mate, I'm doing well with my shareholding in CBA.
Yeah, well, I've heard that you might be close to the top there.
You reckon? Sell everything, buy property, get some finance. All right, what do people do? How do people contact your team?
Finni.com.au. They can jump online. There's literally an inquire now button on the top of the homepage on your mobile laptop, and that will get you straight through to one of our brokers. Set up a meeting, have this detailed conversation, whether it's trust, whether it's personal name, SMSF, commercial, development, whatever it is, asset finance, we're on top of it.
Okay, but specifically, if you have loans in trust, work out what you do. Get ready.
Because like you said, mate, the time is probably now. And if you have a loan that you're considering refinancing and fixed versus variable, there's some big differences there too. So start that strategic understanding of what to do, because as we talked about at the start of this, mate, I think we're at the top. Where to from here is starting to be considering being a little bit more pragmatic as to where your cash flow is going to be for the next few years.
There you got it. Finni.com.au. Go and speak to the team. Tell them I sent you. That's okay, isn't it?
Yeah, absolutely.
I'm allowed to do that.
Phil sent me. Mr. Tarrant.
Well, everyone knows that I am a shareholder in Finni. I do disclose these things, Paul.
Mr. Tarrant sent me.
So I'm as angry as him.
That's not possible.
I'm angry. I'm not really that angry. I find it all very entertaining, really.
Yeah,
all they're doing is just stealing off my children's livelihood.
Yeah, 100%.
We're baked beans tonight rather than fargua. But anyway, what are you going to do? Thanks for tuning in, everyone. smartpropertyinvestment.com.au. Go and check it out. Thanks for joining us. Smart Property HQ on the interweb social media, if that's how you like to get your info. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.